Janet Yellen, chairwoman of the Federal Reserve System of the United States, delivered her all-important speech this morning. Jill Malandrino, business correspondent in New York, explains how a change in monetary policy impacts global markets and local economies in Africa.
Good evening from the NASDAQ market site. As we can see, all three major averages in the U.S. are upticking to just over 0.5% as Federal Reserve President Janet Yellen is making her all-important speech at Jackson Hole, Wyoming this morning. Markets are reacting off of this because they're trying to gain some clues into will we get an interest rate hike in 2016, particularly the September meeting on the 21st. Now, from a global perspective, should central bankers and markets around the world just sit back and watch and see? This is going to be widely watched because these speeches are analyzed in depth and the headlines can and move the markets, as you can see right now as we uptick over here, particularly the financial sector and commodities because they are sensitive to swings in the U.S. dollar. Now, globally, the federal funds target rate of 25 to 50 basis points has forced Europe and Japan into negative rate territory to try to weaken their currencies against the U.S. dollar and improve their competitiveness. But let's take a look at it from a local perspective on the continent. From a developing economy, just like we see in Nigeria. Again, I tend to talk about Nigeria the most because it is the largest African economy and dependent on that crude oil price. And it's also having issues with the Naira trading at record low levels against the dollar. Those two components are why we could see a potential recession in Nigeria. So the majority of basic goods sold in Nigeria are imported from overseas. Therefore, as the Naira continues to free fall, the wholesalers and retailers of goods will have to adjust their prices of their products upwards to reflect the amount being paid for these goods since they are paid in dollars. The basic definition of inflation. It also makes borrowing more difficult. So the near-term catalyst for the Naira is going to be the Federal Reserve in the U.S. raising interest rates in 2016, because if it should, that would move the dollar higher. An increasing dollar could make Nigerian imports more expensive and further impact the Naira. It's not just a Nigerian economy. A lot of economies on the continent import their goods and services, and this does get passed down to the consumer. So this is something that we're going to be monitoring for the September meeting and going forward for the rest of the year. From the NASDAQ market site in Times Square, New York, I'm Jill Malandrino for Africa 54.